Hey guys, it's me, Zeus, and today's video I'm going to explain to you guys how I come up with a bias for my trades. The thing is with determining a bias is that you need to have a framework for why the market should do what you expect it to do. There needs to be logic behind it. And in today's video I'm going to tell you guys how I incorporate the market maker models into my analysis about the marketplace, and I'm going to share with you some chart examples, some trades that I took, and I'm going to share with you the theory about why the market maker models work and how you can spot them easily. So let's dive into today's video. I want to make something clear to you, and that is that price is fractal. And what that means is that what happens on the higher time frames happens on the lower time frames. There's a reason why ICT said in one of his tweets that if we treat the 4-hour or the 60-minute as our daily chart and study the 5-minute structure, that a new world will open for us. There's actually logic behind that, and it all has to do with the market maker models, and today I'm going to prove that to you. I hope you will enjoy it. So here's the market maker sell model created by ICT, which he shared in one of his public YouTube videos. We can see that the market trades up into a key premium array, an order block or fair value gap, or an old high, and then the market reverses and it delivers lower prices. But why does this pattern work? Why does it occur? Why does this model keep repeating itself? Well, let's look at it purely from a liquidity perspective. The market has been trading up like this. What do you think retail believes what the next move of the marketplace is likely to be? Retail believes that the market is going to continue to move higher. So where do they place their stop losses? Below this low, below this low, and especially these lows down here, because retail thinks in terms of support and resistance. So this becomes support. This is support because the market started to move higher here. We as smart money minded traders know that the market moves to areas of liquidity, and that liquidity is needed in order to fulfill the orders of smart money. So if the market is trading higher, we do not look at that as, oh, the market is going to continue to go higher, let's look for longs. No, we wait for the smart money reversal to take place within that premium array, and then wait for an entry pattern to occur to provide us with the opportunity to target these lows. Okay, so here's the market maker buy model. Just reverse the logic of the market maker sell model and you'll be alright. Here's a quick breakdown. We wait for the market to trade into an old discount array. So this could be a fair value gap, an order block, or an old low. That would be here. Then we want to see the market reverse. This is smart money reversal. You could either be a buyer down here in the smart money reversal. You could be a buyer here. Target these highs. Why? Well, retail sees this as resistance. So where do they place their stops? They place their stops above here and above here. What I want you to keep in mind is that because price is fractal, you could use a 1-hour discount array, so 1-hour fair value gap, and zoom into the lower time frames, such as on the 5-minute time frame, and see if there's a market maker buy model if price trades into that 1-hour fair value gap. The same logic applies to the 4-hour time frame. If you see the market trade into a 4-hour discount array, you can go into the lower time frames to see if there's a market maker buy model on the lower time frames. But keep in mind, if you want to have high probability setups, you need to trade in line with the higher time frame bias. So if you see a market make a sell model on, for example, the daily, just like there's on the S&P and Nasdaq right now, you want to be looking for market make a sell models on the lower time frames, because that's the easiest, trading in line with the higher time frame order flow. Of course, you could go counter trend and look for market maker buy models within a market maker sell model on the higher time frame, but that takes a lot of experience and knowledge in order to pull that off. I would just suggest to trade in line with the higher time frame institutional order flow. If you spot a higher time frame bearish institutional order flow, you search for market maker sell models. If you spot a higher time frame bullish order flow, you look for market maker buy models. Keep that in mind. So let's do what ICT said that we should do. I have put on the 1 hour chart of the Nasdaq from last week's trading, and we can clearly see that there's a market maker sell model here. We have an original consolidation down here. The market has been trading up into an old low, into a fair value gap, and on the CPI news release, the market sold off. Then the next day we have a consolidation, and then Thursday comes around. We can see that this fair value gap is holding price. So this signals to us, okay, the market isn't in a mood to retrace higher before dropping lower. No, it's in a rush to take out these lows. Because this fair value gap, this sell side inefficiency, is being respected perfectly. And there's an SMT with the S&P. We could look into the 15-minute chart, because we already knew that the 1 hour chart institutional order flow was bearish, because it was in a rush to take out these lows. So now we have framed the bias for the day, and now we can look on the lower time frames for entry patterns. So here's the 15-minute chart. This is that 1 hour fair value gap, and there's an SMT here with the S&P. We can see that the market retraces into a 15-minute fair value gap after leaving behind relatively equal lows. Remember those lows that I showed to you on the 1 hour chart? Those are these lows. If we dive into the 5-minute time frame, we can see the same thing appear. The market trades into a 15-minute fair value gap, and then it sells off for the PM session to complete the market maker sell model, because there was a lot of sell side liquidity down here, trend line liquidity. We have the 1 hour chart, our higher time frame, signaling to us that the institutional order flow is bearish. The 15-minute chart is signaling to us that the institutional order flow is bearish. The 5-minute chart structure shows us a clear market maker sell model. And now we just need to go on the 1-minute chart to fine tune or take our entry. Is that the market was consolidating in here? Remember, this is that original consolidation on the 5-minute chart. We had the smart money reversal up here within that 15-minute fair value gap. Then we started to see the market break down, fair value gap get respected. Sells off, retraces, sells off, although gets respected. Why does it get respected? Because of this fair value gap. Was here a rejection block. Buy side has been taken, market structure shift, retrace into a bearish order block, stop can be placed above this high, sells off. What I want you to see is that within this market maker sell model, there was actually a market maker sell model on a 1-minute chart, because here you can see trend line liquidity being built up, prices consolidating within in here, the market expands to an old premium array, to an old low. Smart money reversal takes place, rejection block, market structure shift, retrace into bearish order block, sells off, completing the higher time frame market maker sell model and this lower time frame market maker sell model. So what I want you to understand is that fractals appear within fractals. So we could see a 1 hour market maker sell model, but within that market maker sell model, we could see a market maker sell model appear on the 5-minute chart. And if we see that, we can go into the 1-minute chart and look for the same stuff. But what we can do is use our 5-minute premium arrays as point of interest for our 1-minute market maker sell model entries, our price patterns. So what we're doing is we're using the framework and combining that with the logic that the market moves to the obvious areas of liquidity. And because we're trading in line with the higher time frame institutional order flow, the probabilities of being right go through the roof. And I hope that you are able to see the logic of that what I've just described in here. So here's an example of a market maker buy model trade that I took. This was on the 7th of September, so at the beginning of this month. So we can see that the market traded into this old fair value gap here, which was my POI. On the 1 hour chart, I saw that price traded into an order block here, after price traded away from this 4 hour POI. Then I went into the 5-minute chart and I saw that price traded into this 1 hour order block. Then a 5-minute order block got created, price respected this. We saw an original consolidation up here, which was really obvious. There's a lot of buy side liquidity above here. Retail thinks, oh, this is resistance. Let's place our stop losses above these highs. Trend line liquidity. So this was a smart money reversal in my opinion. But this is not enough information or confirmation for me. I need to wait. So I waited and waited, and I saw that this 5-minute fair value gap got respected. Price broke this intermediate term high here, which was my significant market structure shift. And then I went long within this fair value gap, stop below this low, because this low already rebalanced this fair value gap, so this low should not be broken. And then my target were these highs up here. Here's the result of the trade. So that basically sums up this video. I hope I was able to point you into the right direction with regards to market maker models. I will leave a link to the videos of ICT in which he talks about market maker models, because this video alone will not make you fully grasp the market maker models probably. I pointed you in the right direction, and now it's up to you to put in the work and backtest if they really occur within the marketplace. I thank you all for watching. If you enjoyed it or if you learned something new, please leave a like or comment. I would highly appreciate that. And I wish you all a great day. Be safe.